Hey guys, what's going on? It's Rekt Capital and welcome back to another episode here on the Rekt Capital channel, to a very special episode because it's 10,000 subscriber day today. We've reached 10,000 subscribers here on the Rekt Capital channel, and I can't thank you guys enough for your ongoing support, whether that's early on when we first started this channel a while ago, or whether you've only just subscribed to the channel very recently. Really appreciate the support. Let's continue this really great momentum and let's dive into this video. Let's dive into this celebratory video on stock to flow deviations, a very in-depth article that I shared on the Rekt Capital newsletter not too long ago, a week ago. This week I published part 2, but let's talk about part 1 because it really does set the scene for part 2. In part 1, essentially I focus on the upside deviations. I talk about why they matter and how much does Bitcoin tend to upside deviate. So let's dive into all of that. Subscribe to the channel if you haven't already, and let's talk about the stock to flow deviations. Of course, this was a free version of the Rekt Capital newsletter, but I'm going to be publishing parts 3 and 4 exclusively for subscribers of the newsletter. So if you'd like to read those, feel free to sign up today using the link in the description down below. But essentially speaking about the stock to flow model, how Bitcoin's price action just tends to meander around this brown stock to flow line, essentially mapping out the trajectory for Bitcoin's price action. The stock to flow, as a result, has been a reliable predictor of Bitcoin's price action, just kind of outlining it ahead of time, and Bitcoin does a very good job of following this. In fact, in this cycle, it's perfectly following the stock to flow line. Perfectly. You can just see how it's essentially tracing it. But in the past, we tend to see deviations towards the downside, towards the upside, and these upside deviations or even downside deviations, they vary in their degree of volatility. But my essential thesis here is that upside deviations are where we reach a bull market top, and downside deviations from the stock to flow model, the stock to flow line, are where we reach periods of bear market bottoms. So essentially, when we see an upside deviation, that's the period of maximum financial risk for holding Bitcoin. And when we see deviations below the stock to flow line, that's where we see periods of maximum financial opportunity. So to translate this into psychological terms, a period of maximum euphoria and FOMO and exuberance, over-optimism in Bitcoin's price action whenever we see these deviations beyond the stock to flow line. So this is a period of maximum financial risk because we tend to see tops here, bull market tops, but this is where we see a lot of those combustible elements of joy and optimism in the market, euphoria and greed, extreme greed. So this is definitely the point of financial risk, as we see here when Bitcoin reached 20,000 as well in 2017. And the psychology when we deviate below the stock to flow line is essentially maximum pessimism, extreme fear towards Bitcoin. Nobody wants Bitcoin at that point in time, but it is the financial opportunity that really we shouldn't squander. It's difficult to make the most of such an opportunity because there's so much fear, uncertainty and doubt towards Bitcoin, and many people don't know whether Bitcoin will ever recover in these periods right over here. And maximum pessimism is really prevalent here, extreme fear and whatnot, especially after a minus 80% plus retracement from the bull market highs. We tend to see average corrections from bull market tops to bear market bottoms. It's an average correction of 84.5%. So you can understand how if we see Bitcoin's price just retrace for an entire year, really 50 weeks at a time in fact, then it's very difficult to get optimistic about such an asset. But the way to think about this is that Bitcoin is at a cheap discount. Minus 84%, of course, if you went into a supermarket and saw a block of cheese minus 84% on sale, you'd be very skeptical. And I understand that that sort of discount might not even be very appealing or attractive. But in the crypto market, minus 84% is a fantastic discount. And it's very important to just be confident in those discounts because they really do precede fantastic upside. It's very important to position yourself in those periods of maximum financial opportunity below the stock to flow line, because afterwards we tend to see fantastic price appreciation in Bitcoin's new bull market many months after that downside deviation. So in any case, this is what I really talk about in the stock to flow newsletter, but I also emphasize why these deviations occur in the first place, because the stock to flow line over here essentially models scarcity. It quantifies Bitcoin's scarcity quite well, and this scarcity of course is caused by the Bitcoin halving events, which I've only plotted over here. We have 3 Bitcoin halving events throughout time, and these halving events are essentially major catalysts, fundamental changes in the Bitcoin blockchain, where suddenly at this point in time, so in the third halving, May 2020, at this point in time, the amount of Bitcoin that gets created every 10 minutes is suddenly cut in half, and that of course affects how much Bitcoin is suddenly entering into the circulating supply. So definitely this is a scarcity that is suddenly unleashed and implemented. Suddenly miners are getting less Bitcoin for creating those Bitcoin. They're getting less rewarded than before, and this is obviously going to be very impactful for the price action that follows afterwards, because Bitcoin halvings tend to precede fantastic explosive rallies in Bitcoin's price action because of this scarcity, because ultimately scarcity enhances value. So whenever you see the Bitcoin halving right over here, you see Bitcoin's price appreciate. And it doesn't only appreciate, it also appreciates to such a point that it deviates beyond the stock to flow line. You're seeing that this is happening already, perfectly following this stock to flow line. But over here, history is just showing how we tend to deviate beyond the stock to flow line after the halving, and it takes many months after the halving for this deviation to occur. So we're probably going to see this deviation occur many months in the future. So the stock to flow line is a great predictor of Bitcoin's price action, outlining where it could go. But the main thing to bear in mind in this article, in this newsletter, is that these deviations are the ones that we should be focusing on as investors, because these are upside deviations that precede bull market tops. And of course, the deviations towards the downside precede bear market bottoms. But I'm going to be talking about those bear market bottoms in a future piece. Let's focus in this part 1, let's focus on the first 3 deviations, just to get an idea as to what we can expect in terms of these Bitcoin stock to flow deviations towards the upside. So first of all, sign up for part 2. It has already been released, but feel free to sign up for part 3, which hasn't been released just yet. You can sign up using the link in the description down below. The first stock to flow upside deviation took place in June 2011, and of course, here on this chart, you can't really see the stock to flow line going back that far in Bitcoin's price history. So what I had to do essentially is extrapolate this stock to flow line myself, roughly speaking, and just breaching that price point on the stock to flow line. It was around $1.90 Bitcoin in 2011. Can you believe it? This is where the stock to flow line was breached, and we saw the upside deviation. So essentially in this article, I talk about how much did Bitcoin's price deviate from the stock to flow line before reaching its bull market peak. So in 2011, and I mapped this out here on a chart just to illustrate to you guys that once it broke past the stock to flow line, Bitcoin peaked at $28.79, and that was essentially a rally of 1,157%. Fantastic upside. What an upside deviation beyond the stock to flow line. So that's the first deviation. Let's talk about the second deviation. And of course, if you want to read a bit more details about this, feel free to check them out in this newsletter. In April 2013, we saw another deviation. And it's really important to talk about this deviation because, as you can see, we have one deviation and then we see another deviation. So essentially we have seen 2 separate market cycles, and I talk about this in the newsletter in a bit more detail, because if we just look at Bitcoin halving 1 in 2012, in November 2012, you'll notice that we saw, after the halving, we saw 2 market cycles, 2 bull runs and 2 bear market corrections. And this is essentially why I go into a bit more detail in the article, because it's clear as day. Here's Bitcoin halving number 1, and you see a bull trend, 80% bear market correction, and then another bull trend, and then an 86% bear market correction. So it's really important to just understand that we have 2 market cycles after that immediate halving, and this is reflected in the stock to flow deviations. This being the first post-halving upside deviation, and I just measure this just to showcase where we are at, what the difference is, and essentially speaking, from breaching the $39 region and reaching the $230 region, that was a rally, an upside deviation of 477% upside deviation. Let's look at the second post-halving deviation, because that comes after a successful retest of the stock to flow line as a support. So that's an interesting insight in of itself, because you can see how the stock to flow line is a very important reference point for Bitcoin's price action, not only in terms of deviations, but you can see how once we deviate, we pull back and test it as a support before deviating for another time. Really interesting to see how the stock to flow line can be a resistance and a support. But let's talk about that final deviation in part 1 of this series, the third stock to flow upside deviation. So essentially that second post halving 1 Bitcoin rally. And very simply, once we rebound from that stock to flow line, we rally exponentially, right? So this is essentially the rebound from the stock to flow line and then deviation towards the upside. Fantastic upside. We see 554% from rebounding from the stock to flow line and then reaching that bull market peak of 1,133%. Before reaching the bull market top of 1,134. So really interesting to see how these deviations occur. They recur throughout history, but they're also very important in preceding bull market tops. So in this first instance, I believe we had a 1,100% increase in Bitcoin's price action beyond the stock to flow line. Here we saw a 400% price increase beyond the stock to flow line, and here we saw a 500% increase. So these upside deviations are quite volatile. They may be changing over time as the market matures, but still fantastic upside can be achieved beyond the stock to flow line. So in part 2 of this series, I'm going to be covering deviations 4, 5, and 6. So stay tuned for that. I hope you enjoyed this part 1 of the series. Feel free to subscribe to the YouTube channel for more videos in the future, and of course part 2, which is coming soon. And of course, like the video if you enjoyed today's video. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.